Welcome to Home Biz Tax Talk. My name is Lysandra Everett, and I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right. So today we're going to talk about quarterly payments, estimated tax payments. On the show, I announce when the estimated tax payments are due, and that got some people's wheels turning. And so now the question is, well, when and how does my LLC pay estimated tax payments? All right. So let's talk about the LLC as it relates to your taxes. Your LLC does not pay taxes. Okay. That's the one thing that you have to understand. The only business structure that pays its own, files and pays its own taxes is a C corporation. Okay. All the other business structures, they wind up on your personal taxes. Now, you may have some state requirements for taxes, but at the federal level, the C corporation is the only entity that files and pays its own taxes. And what I mean by requirements at the state level, meaning that still you don't file, but you might still have, for your business structure, you may have a minimum tax due. So for instance, in Massachusetts, if you have an S Corp, you have a $456 minimum tax due regardless of whether or not you made money. Okay. So in some states and localities, your LLCs also have some sort of tax to pay, whether it's a business privilege tax or if it's a minimum tax that's due. It just depends on your state and locality. However, the thing that you have to understand with your LLC is that it is not a separate part of your return. It is on your personal return. If you have a single member LLC, which is where this question came from. If you have a single member LLC, for tax treatment, you are considered a sole proprietor. So you will still file a Schedule C on your personal return. And so it takes into account all of your income. So if you have an LLC that you're using to run your business and your spouse has a W-2 job, it takes all of that into account. And if your tax liability at the end of the day is $1,000 or more, then you have estimated tax payments. Okay. And then you will have these little vouchers. So there's nothing to file quarterly. You have these little vouchers that tell you exactly how much you need to pay and when. Quarterly tax payments, estimated tax payments, whatever the name you want to call them. Your Q1 is due on tax day. Your Q2 is due 2 months later in June. On June 15th, then you have September 15th for your Q3, and your Q4 is due January 15th. So if you put that all together, and what I stress to my business owners is that the first 6 months of the year is when you're going to be writing the government the most checks, okay? Because you're going to have to pay your Q4 in January, your annual tax that may be due on tax day. Your Q1 is also due on tax day. So that's two different tax requirements. And then your Q2 is due in June. So that first 6 months, you writing the most checks to the government. Okay. So but again, you're not writing in the name of your LLC. You are writing in your personal name. So it goes on your personal taxes. I may have Everett Tax Solutions LLC, but Lysandra Everett Tax Chick is who's got to write the check and pay the bill. Okay. So this is why I stress so much about saving that 30% for your taxes, because in that first 6 months, you just writing your name and just signing that check and just, and yeah, you can pay it online, but regardless of how you do it, it's got to be paid that first 6 months. So just understand that, your business taxes are not separate from your personal taxes. It's all on one personal tax return. Even if you have a multi-member LLC, which is considered a partnership, your partnership may file paperwork, but it does not pay taxes. Any profit and loss is issued on a K-1 to the partners in proportion to how much into proportion of their ownership. And then that income, winds up on your personal return. Okay. And so from that, if you put it all together and come out owing $1,000 or more for your personal tax liability, then you will have estimated tax payments. Okay. And for an S corp, again, if you have an LLC and you elect S corp treatment. Now, I'm telling y'all, don't be just going all off willy-nilly and forming these S corps just because you heard you can save on taxes. I'm gonna need for y'all to not, okay? But even still, at the federal level, you file paperwork for your S corp, but any dividends, any profits is then distributed to the members in proportion of their ownership. Is issued on a K-1. And that's added to your tax return. And you being the employee owner of said S corp, you will have income taxes that you will have to deal with because you will have to issue yourself a W-2. So if you put all that together and you come out with $1,000 or more, then thou shalt have estimated tax payments. It's that $1,000 or more in tax liability that would require you, would determine whether or not you have estimated tax payments. So if in the event that you have, like I said, an LLC and your spouse has a W-2 job, but there's enough withholdings on that W-2 job to cover your tax liability, then you don't have estimated tax payments. If the withholdings are high enough and you get a refund, hey, then that's when you get a refund. Okay, but please listen to me. As business owners, you generally do not get refunds. The only way you get refunds is if you overpay your taxes throughout the year. So if you've got a W-2 job and you have you've increased your withholdings, that's paying taxes. Okay. If you have estimated tax payments and you overpay throughout the year based on what your income and your expenses and what your overall profit is, then you would get a tax refund. But by and large, business owners, if you're doing what you're supposed to do, we write checks. Okay. But please hear me when I said, if you overpay in your estimated tax payments, so you still got to write the check. And at the end of the year, if you overpaid, then you get a refund. Now you can have that refund applied to your tax liability, to your estimated tax payments for the following year. You can absolutely do that. But, but that's, however you do that. A lot of people do, so that's one less check that they have to write. But hey, however you do it. But just know that for an LLC, it is not a separate business structure to where it files its own taxes. It takes into account the profit from your business as well as any other W-2 income, any other taxes withheld, all of that. When you put all that together, and don't forget the self-employment tax, okay? That's another thing that we forget about as business owners, is that there's self-employment tax as well. So you could wind up with zero income tax but still owe self-employment tax. All right. And if you have tax credits that offset that amount, then right? But it's still all encompassing. It's all encompassing in, if you got tax credits from somewhere else, if, the withholdings, all of that stuff counts when it comes down to your final tax liability when you're dealing with your single member LLC for tax treatment. You're a sole proprietor. All of that. Okay. So yeah, so that's how it works, you guys. But again, it's not, but it's not that your business is separate. Okay. It's all a part of your personal return. And I got a couple questions. So can you elect to be seen as a different business entity on Form 8832? Yes, you can. But when you elect that different treatment, whether you elect S Corp or C Corp, then you have to abide by those rules. So if your LLC has elected C Corp treatment, then you will file as a C Corp. Your business will file and pay its own taxes. And for C corporations, if you have a tax liability of $500 or more, you have quarterly estimated tax payments. Okay, so C corporation, $500 is the is the base, is the minimum. If you owe more than that, then you will have estimated tax payments for your corporation. Now, if you own a corporation, you as the owner, if you are materially employed in this business, then you need to pay yourself a salary. You do not pay yourself on a 1099. That's a whole nother broadcast, but I have to get that out there. You have to pay yourself as an employee and you file taxes. Okay. And so Sylvia says that she has an LLC and got a small refund because she adjusted her W-2. Absolutely. That's absolutely right. So once you change business structures, okay, so this is a bonus. Once you change business structures, this is not something that you go do all willy-nilly, okay? Usually once you become whatever, that's where you stay. Can you change back? Yes. However, that is, this is why you need to talk to somebody before you go change your business structure all willy-nilly anyway. Because you want to make sure that when you decide to elect different structures, that's where you're going to stay. So for instance, if you elect an S corporation and then you go, oh my gosh, I don't want to do this S corporation anymore. You can rescind the S corporation, but that particular entity cannot become an S corporation again for 5 years. Okay, this is some bonus stuff y'all are getting because we're talking about paying estimated taxes. Now we're talking about something else. But I really want to make sure that you get this and you understand. So if you elect S Corp treatment and then you go back, you can't be an S Corp for 5 years. Okay, then you have to apply to get that again for that particular business entity. Now, for a C corporation, this is not something that you really want to play with because because when you become a C corporation, there's a whole lot of administrative requirements that you have to make sure that you're operating properly, both at the state level and at the and at the federal level. So if you elect to go from a C corp to, like a single member LLC where you were, you're going to have to go through a lot of government stuff. You're going to have to go through your state for your state to allow you to dissolve that C corp, right? So there's a lot of red tape when it goes to undoing an election. So this is why you want to talk to somebody and make sure that's the right move for you. Because the undoing can cause you so many other problems that you just don't even, want to. All right. So, these are great questions, and I want to make sure that, that you understand that it really is a big picture thing. Your taxes, even though you might think that there's business taxes and there's personal taxes, it really is all encompassing, right? Taxes is a big picture thing. It's not that you can just look at one thing and say, this is the right answer. This is why I stress talking to somebody and putting your whole situation together. Okay. So that's it. So bottom line, your LLC does not pay estimated taxes. This is a personal tax liability. If you have $1,000 or more in that liability, even if it's self-employment tax, then you will have estimated tax payments. And your annual liability is due on April 15th, as well as your Q1 estimated tax payments. This is why I tell my business owners, you need to be filing like in February. Okay, because by February, you should have all of your other documents, from your mortgage company, your investments and all of that. By February, you should have all of those documents collected and be ready to file in February. Because if you wind up with a surprise, you still have February, March through April 15th to hustle this money up so you can pay your tax liability. So when you file your taxes, you don't have to pay right then. You have until April 15th to pay your taxes. This is why I say file early. So if you wind up with a surprise, you got some time to work with. Okay. It's not a lot, but you got some time. Okay. So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. Have a great day, and I'll see y'all next time. Bye.